Michael again on the Australian dollar, 826. It's Wednesday, and I just did a few videos, one on a weekly, one on a daily, and now I'm going to zoom in a little bit. I'm positioning for a shorter term, and considering the depth of how where we are with the stochastics on the daily chart here, what we saw on the weekly chart, and also how we're outside of the Bollinger Bands, which statistically can't last. And we have some indifference candles showing up as well. Or they also call them spinning tops. This is also known as a hammer. The other way, it's known as a hanging man. Candlestick formations tell a lot. What I did is I actually drew a Fibonacci retracement zone. Excuse me, from the bottom of this wick, because I'm planning on taking a short-term trade up. It's almost like a scalp style trade. What I did is I drew it from the most extreme level, the bottom of the wick, which is I prefer to use the extreme level. Some people use the body, some people use both and see where the levels land. I'm using the extreme level, and what I'm doing is considering the depth down here of or how deep the stochastics RSI is. I'm planning on the thing to come to about 76.4. So I'm looking at the second psychological resistance level from where we're at. So if we were to place a trade we're at 0.7130. Assume we place a trade at that level, or did maybe a buy limit at, assuming it will maybe pull back down to another 15 pips, or maybe back down to the 0.71 psychological support level. It might not make it back down there, but that's the risk you had to take with buy limits. And anticipating it to stretch up to 0.725, that would be a nice 95 pip trade. We put a stop at 1/3 of that at about 30 to 35 pips, or psychological resistance level of 0.72 might cause us a little bit of resistance, and we could just place it there and do a quick 70 pip trade, and then put our stop at about 20 25 pips. 3-to-1 profit loss ratio. That'd be another option too, but I definitely think that that's at least going to happen. Usually when we're looking at the daily chart, you could see that it's most likely not going to be a tiny little 38% or 6.618% rise, especially when we looked at the weekly time frame. So if I jump down here to a 4-hour chart, and you could actually see there's technical divergence occurring here right out of the gate. As first thing I see is first time I even looked at this, and I could see it. It's definitely indicating that we're going to start seeing some very, very, very soon. Actually, we're going to start seeing the prices start rising. So I'm going to put real quickly, just put a quick trend line here. I mean, it's not exact. Just doing it visually above the trees view, but it tells you, I didn't connect the bottoms of all of them, but it tells you that we have some upward steam that's anticipated, or upward pressure that's being indicated to us through the stochastics indicator rising, and price is still falling. So basically price is falling on zero steam. There's no reason technically that price should still be falling. So it's about to rise, and you can see that we have multiple obeyances of this support level. It's also a Fibonacci level based on what's drawn here, and I'm definitely expecting the price to increase. So if we jump down here for 1 second to the 30-minute, it looks a little more sideways. You can see the 30-minute sideways, and what that tells me is, and obviously stochastics are coming from the overbought area, and this channeling on a lower time frame, at first you'll look at it and be like, oh, there's nothing to trade here, if you were to just start at this time frame. That's why I do a top-down approach. You might see it and be like, oh, there's nothing really going on, and then boom, it shoots up. Based on what I looked at, it's actually channeling because it's at a turning point. It's channeling because traders, essentially the story that's being told is that bears were pushing it down. It hit an area of support. Bulls started to take over. Bears said no. Bulls took over. Bears said no. And then eventually bears are going to go onto the bull side and be like, wow, I think they're right. And I'm going to start putting some buy orders too once their bias starts shifting over and they start actually seeing what the bulls are seeing, or what the bulls are seeing, and then the turning point is going to become a reversal, and then it's going to play out where we are. I think there might be another bounce. If I draw right here, we almost see like resistance level right here, which is at that Fibonacci level. I would not be surprised if it comes back down and tests that. There's plenty of room with a Bollinger Band. Stochastics is only at neutral. As you can see, since we started looking at it, it started dropping. Ignore this trend line that applied to a higher level. And it's probably going to come back down and retest close to this level. I'd actually be conservative, put a buy limit a little above 0.7100, just so you don't miss it. Or you could put a certain percentage there, maybe at 0.715 or 0.7115 or 0.7120. And then, use a 3-to-1 profit loss ratio accordingly. Good luck, and we'll see how this one plays out.